Alright, good afternoon everyone. Today is Wednesday, isn't it? Yeah, today is Wednesday, the 12th day of June 2013. Um, let's go over the results first, okay, from the morning session. Today was kind of odd. We had 10 trades and all that. The thing that was odd is that we only ended up positive in two areas that we traded. We traded 5 different markets. We were break even on 3, and we were plus 20 ticks on gold and plus 7 ticks on copper. We're break even on soybeans, break even on the Russell, break even on crude oil. It took us 84 minutes this morning and 8 trades to make our 2 points. Let me bring up the spreadsheet so you can see that. All right, here it is. This morning, slide it over this way. Here, I'll remove the ad so you don't have to look at the ad. This morning, it took us 84 minutes and 8 trades to make $287.50 per contract. Now, we were at $87.50 on 7 trades, and that 8th trade, we gained $210 on that 8th trade. We were down 1 tick at the time on gold, and we ended up making it all back. All right, so that is how we ended up on the morning session. Overall, we took 10 trades this morning, and on the month of June, we are up $2,455 per contract on the 8 trading days so far in June. All right, we have to keep, pretty much keep this pace up, a little better than today, actually, a little better than $287.50 to beat last month's total of $6,292.50. That's our goal for the month. The next 2 days, Thursday and Friday, tomorrow is rollover day. But in the next 2 days, if we can make, fair amount and keep that consistent, then we have a pretty good shot at breaking our prior record, which is $6,292.50 per contract in the live trading room. All right. If you have not taken a free trial with us and you want to take the free trial with us, go to www.cfrn.net/apply, sign up for the free trial. In the free trial, you get access to everything you see here, all the indicators. You get access to our live trading room. You get access to everything you see here. Dwayne and myself, all the charts, all the indicators, the live trading room, even the weekly trading zones. The thing that you don't get access to, you can't go into the partners meetings, and you can't go into the members area. You do have to become a partner to go to the partners meeting and be a member to get into the members area. All right. That said, there is a partners meeting tomorrow night. Every Thursday night, we have a partners meeting, 9 p.m. Eastern Time. If you want to become a partner to get in there, then if you're on the free trial right now, you should have something in your inbox. If you were on the free trial yesterday, you should have something in your inbox. If you're on the free trial and you don't have something in your inbox from yesterday, or even today, in your inbox telling you what it takes to become a partner, then send us a quick email at support@cfrn.net, and we'll get all that information out to you. All right. Now let's go over the trades. We'll start out with crude oil. Okay. We only had 1 trade on crude this morning, I believe. Crude inventories came out today. Holy smokes. Let me just do this min-max price, auto min-max. All right, crude inventories came out today. We didn't trade a ton of crude today, as you can see. We took 1 break-even trade right in here. All right, we shorted it in here. It came back up and took us out of break-even. Actually, I think we shorted it. Yeah, shorted on the down close in here, and it came back and took us out of break-even after we got 4 ticks profit in the trade. There were more opportunities in the crude, but I just didn't catch them. All right, this up close right here was a long trade. We were looking for another opportunity over here, but we didn't get it. Over here, there was a shorting opportunity right there on the down close. In here, we had the crude inventories came out, and I had highlighted this area in here because the crude inventories came out higher than anticipated. And when that happens, the way that the crude typically works is by the end of the day, the price would be lower than where the inventories came out if there is more supply than there is demand. Okay, typically the prices are going to go down. You can see the prices did go down. Right now they're up a little bit higher than where it was, but by the end of the day, we'll probably see them drop down below there. I was looking for more opportunities in here all the way through, and I just wasn't able to take all the trades. Okay, I was looking for a shorting opportunity right here. This down close was a short. Would have given me a break even. We didn't put in a lower swing on that, so there was no trade in here. Changed directions. There was a long opportunity in here I missed. There was nothing in here. There was a long opportunity in here that I missed. Changed directions again. Short opportunity in here, and that was pretty much the end of the morning session. There wasn't a ton that we could do with the crude this morning. All right. We're kind of hesitant to trade it anyway because of the crude inventories, but there just wasn't a lot of opportunity in there. All right. Now on the Russell, I believe we traded the Russell a little, didn't we? Let me see. Yeah, just very little. Yeah, I have one trade marked down. We have one trade on the Russell. All right, we missed this trade in here. There was a nice short trade on the Russell. I had drawn this in to show that it was bottoming, but we missed this opportunity here and this opportunity here to go short on both of these right here on the move down. This right here was a weekly trading zone. Price was approaching that weekly trading zone for a good period of time this morning. We showed this as a bottoming area right here, and it did in fact bottom there and moved up off of that. Then in here, it was actually topping. I didn't show the topping. I might have said something about it, but I didn't show it. But I got long in here, and I ended up with a break even on the trade. It changed directions there and gave us a shorting opportunity. I missed that, and after that it was going into the zone, so I wasn't interested in it. All right. Once it broke through the zone, there were more opportunities in here. There was a long opportunity right over here. All right, a long opportunity right over here, and that would have been a break-even trade, a shorting opportunity in here. That would have worked out pretty well. I didn't take any of that. All right. The only trades that I took are the ones that you see with the yellow arrows on price. Okay, those are the trades that I actually managed to take. Now, you may be asking, well, if you had that many opportunities, why didn't you take all those trades? When I'm answering questions from hundreds of people and trading 8 different markets at once, it gets a little busy. So I do miss a lot. You guys should be taking those trades if those are the markets that you choose to focus on. All right. Now in gold, we took a few trades in gold here. We took more than a few trades in gold. That's what I was doing, sharpening my chopsticks. We took more than a few trades in gold here. Our first trade in gold was a break-even trade. This trade had gone up 4 or 5 ticks and came back down, took me out of break-even. The next trade was right up here. There was an opportunity to get long there, an opportunity to get long there. An opportunity to short over here. If you did short this, it looks like you would have stopped out. You would have made money there and there. Stopped out there, made money here. Made money there, made money there. There are a bunch of opportunities right here that I missed. Okay, I did take this one right here. I believe I took 20 ticks profit on this one, 21 ticks profit on this trade. Or wait a minute, no, I took 7 ticks profit on this trade. Sorry, I took 7 ticks profit on that trade. I lost 8 ticks on this trade. That put me down 1 tick. And I made 21 ticks profit on this trade. That put me plus 20 ticks. I missed an opportunity in here for another bunch. Right there, there was another 20 in there, easy. More opportunities in here. And here. I showed an area in here that I said it should be bottoming right there. If we didn't put in a lower swing right there, that was going to be a bottom. And it was in fact a bottom, and that was the end of the morning session. So there was a bunch of opportunity on gold again, and I managed to get 20 ticks out of it. All right, 20 ticks out of gold. So gold was my big winner for the day. Let's see, coming over here, I took a copper trade. I took one single copper trade in here, and it did end up bottoming out over here. There was very little follow through. By the time I had I guess I was at minus 1 tick for a long period of time this morning. I was plus 7 ticks on gold for a long period of time. For me, a long period of time is like 30 minutes. I was plus 7 ticks on gold for quite a period, and then I lost a gold trade, and so I was minus 1 for quite a period, and then I won the copper trade. And so I was minus 1 on gold and plus 7 on copper. And the copper trade was right here, just the down close off the BBC, because we had bearish divergence with a red cycle. Bearish divergence with a red cycle. Right, so we ended on the down close right there and took 7 ticks profit on that. There was very little follow through. until we grabbed a hold of that gold trade, and that put us up. It put us over our 2 points. But the gold trade itself, it was worth $200. So we were sitting at 277.50, and then we had a $210 gold trade, and that put us at 287.50, something like that. Anyway, we only took one trade here on copper. It was this short right here, and that was it. There were more opportunities in here on copper in the pre-market when I first turned everything on this morning, right in here. All this was happening right here. A down close right here with bearish divergence, and then another down close right in here with bearish divergence. That was a little bit pre-market, but it was there. All right. Let's see. Let's jump over to soybeans, because I traded a little soybeans this morning. Twice I traded the beans. Now, the crop report came out at noontime on the beans, so let's... not the crop report, I'm sorry, the grains report came out. I'll go to that in just a second. All right. The very first trade on the soybeans was right here. Beautiful trade. If you got it, I missed it. The next follow-up trade, it changed directions in here. We had a follow-up trade on the long side. I got into this one. I ended up having 4 or 5 ticks profit. Moved my stop to break even. Came back, took me out of break even. I got into the next one over here. Had about 7 ticks profit. Moved my stop to break even. It came back and took me out of break even. Those are my soybean trades this morning. Now, let's scroll over here to the when the crop report came out. Or not the crop report, but the grain report came out. Right in here at noontime. You can see it jumped around between 12 and 12:01. There were all these bars in here. And it still reacted quite a bit off of that. You can see there were, in here there was a shorting opportunity. Right here was a spot to short. Okay. Then we had bullish divergence, but we didn't have any place to trade it. We had bullish divergence over here. Still looking for a spot to trade it. Not really anything. I have to draw a trend line down. You might have had a long trade right there that would have stopped out. All right, followed up by a long trade over here where you would have gotten it back, and another long trade there where you would have gotten it back. No short trade in here. Okay, we had nice bearish divergence, but we weren't set up for the short up here. The short would have happened right over here. This is where the short would have happened. Okay, change directions, another short opportunity right there, and another one right here. That probably would have been a break-even trade for me. Change directions, and long trade. That would have been it. That would have been it on the soybeans. But the soybeans were pretty flat today in the live trading room because I think that big grain report was coming out. All right. The NQ, we pointed out some trades on the NQ this morning. We didn't actually trade the NQ, but we pointed out some trades. The NQ had good volatility this morning. Let's scroll back here and see if I pointed any out in the... No, I didn't point anything out until right over here. I pointed out a short trade. You can see it went down. A long trade, it went up. Another long trade, it went up. Another long trade, it went up. A short trade here, it only went down a little bit. I don't know that I pointed anything else out. Yeah, there was another one right here. Short trade that dropped. Okay. All the stuff that we're doing on every single market is the same. It works on every market. All right. I'm going to show you guys something else right here. This is the ICE crude, meaning it's on the ICE exchange. This is crude oil on the ICE exchange. I just dropped everything on it. The same template. I just went File, Apply Template, and I put the CFRN template on it. Okay, you can see it's the CFRN template. It's the same set of indicators across every single chart. Every single time frame is the same. The risk on every single trade is the same. It's always 8 ticks risk. The same setup, the same everything. We try to do everything the same, so it's easier for you guys to learn and do it right. Okay. You can see here on this crude oil, I didn't mark up all the trades over here because I was marking them up on the other crude, but it's all the same stuff. If you put this crude next to the other crude, you'll barely be able to tell them apart. And they're both $10 a tick, but the actual fees on the ICE exchange are less right now because the ICE exchange is trying to get people to move over there and trade more over there, trying to get a little more volume over there. All right, so the Russell is on the ICE exchange, and this crude is on the ICE exchange. Okay, WTI-MN3 is the Daniels or the DT Pro symbol for it. All right, let's see what else. on the ES. Dwayne went over all the ES stuff. I didn't really point much out on the ES this morning. I don't think I highlighted anything on the ES today. Did I? I had one long in here that went a little bit, went about 1.5 points. That's it. That's all I highlighted. It's not to say that's all there was, but that's all I highlighted. There was a short right here. 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 No, so there were more opportunities in here. I just didn't highlight them. All right. That's it. That's what we have, guys. I wanted to flip over here to the dollar just to show you. This was another chart that I just kind of threw things on. I'm not even sure what it looks like today. This is really my first time looking at it, but this was just another chart that we had never traded on before, and I just dropped the CFRN template on it. And that's all you have to do. If you have a chart that you want to see things on, like maybe the 6B right now, right? Canoe, is that one of the ones that you like to see all the time? The 6B? 6BM3. You just change the symbol. That's all. And eventually here it'll populate. There it is, the 6B. Same exact time frame, same exact indicators, looking for the same exact trade setups. All right, on the 6B, here's an entry. Let's see, we need divergence, test of the VBC, there's an entry. I wouldn't have done that one, or that one, or that one. Let's see, what we would have been looking for in here was bullish divergence in an up close above the trend line. So there's one of those right there. Now that's outside the morning session. If we go back into the morning session here, there wasn't a lot in the morning session. But if you go to the pre-market a little bit, you know, there was right in here. Drawing the trend lines down. There would have been a trade right here that would have stopped out right there. That would have stopped out. Okay. If you go into the wee hours of the morning, right in here, long trade right in here, long trade here, and another long trade right over here. Actually, that one didn't have a higher swing, so you wouldn't have gone after that. One short trade over here. Okay. Change directions would have been a long trade right there. That was pretty much it for that period. Okay, now it gets over here. We have some divergence again on the bottom. Bearish cross, short trade right in there. Another short trade right in there. And that would have been it. So that is the 6B. What keeps you out of the consolidation trades on the ES? I'll show you. Let's go back there and look at that in more detail, okay? But this is the 6B. 1, 2, 3, 4, 5, 6, 7. Hang on. Trying to scroll over. 7, 8, 9. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7, 8. 9, 10, 11, 12. 12 trades, let's just say. There were 2 of those were losing trades. Let's just say 4 out of the other 10 we'll say were break even, and 6 were winning trades of 8 ticks, we'll say. I mean, they're much more than 8 ticks, but just look in here and you can see that. So that would be a net of 4 winning trades of 6 ticks. It would be 24 ticks, which is the equivalent on this would be the equivalent of just about 24 ticks. That's $240 a contract, right? The 6B is $10 a tick, right? I'm pretty sure. Or is it $12.50 a tick? I don't know. Either one. But it would be a positive day. All right. The question was, what keeps you out of the chop? Okay, you're welcome, Canoe. What keeps you out of the chop? Now let's just find an area of chop. Okay, and we'll just go through it little by little. This is an area of chop right here. Now there's a couple things. Oops, didn't mean to do that. Oh, I guess I have to. All right, well, I was just going to go through it little by little, but anyway, in here, as the MA1 crosses below the BBC, there's, the setup that you're looking for is the MA1 crosses below, price pulls away, price pulls back up and tests it, gives a down close with bearish divergence and a red cycle. That's everything you're looking for. That all came together on this bar right here. This one, I'll draw an arrow right at it. That bar right there, the down close of that bar, is where all those things came together. Now, these blue lines that I have on here, they're a weekly trading zone, so you wouldn't have taken that. Okay. But it goes through it, and it pulls back up. Now, right in here where it pulls back up, in this particular case, you would have drawn a trend line up. What did you say, 11:15 chop? Okay, well, what time is it? 12:48. You know what, I'm going to jump over to the 11:15 chop. In this case right here, you would have drawn a trend line up there, and you would have looked for a down close below the trend line, and you would have looked for divergence down here. All right, but let's go to the 11:15 chop right in here. Okay, so the first thing you're going to look for right in here is the bullish cross of the MA1 over the BBC. Let me bring up the rules so you can actually go through them, okay? When you're going long, step 1 is a bullish cross of the MA1 over the BBC, all right? The red and blue line over the green line. Step 2 is price pulls away from the BBC. Right here, price never pulled away. So you're not looking to go long in here yet, okay, because price never pulled away. All right, now it changes directions. Price drops back down through the BBC. It changes directions. Now there's a couple things happening here. One is right here. There's no lower swing. That right there in itself indicates chop, okay? You weren't successful moving up, and so far you're not successful moving down, okay? But let's just say that that's, I mean, we could just go with it and say that in that case, we'll ignore the no lower swing criteria there. So you have a bearish cross of the MA1 below the BBC. Oops, a bearish cross of the MA1 below the BBC. I don't know why the charts just jumped over like that, and this time price did pull away. Okay, so step 1 is this. Step 2 is the price pulls away, and it did. Step 3 is it pulls back up, tests the BBC, and closes in the direction of the cross while you have bearish divergence. Step 4 is the bearish divergence. So over here we had a couple things wrong. Well, 3 things wrong with this. 1 was we didn't have a lower swing. 2, when we pulled back up, we didn't get a down close. And 3 is we didn't have any bearish divergence down here. So there was no trade here on the short side. Okay. It's got to meet all the requirements really for it to come together as a valid trade. If it doesn't come together as a valid trade, then you don't take it. It's not to say that you're not going to get stopped out in the chop. I mean, you probably will get stopped out. In most choppy scenarios, you may get chopped up and stopped out once. But usually if you're stopped out once, you're not going to get stopped out again because you're waiting for it to break out of that. You're waiting for it to give you some higher highs and lower lows. And, like over here, once it finally got a lower swing in here, you see I wanted to see a down close below this level. Down close below that level. We finally got it here, but then it moved back up. So now we would need a down close below that level. We get that right here, okay? And it moves up, tests the BBC, gives a down close, and right in here, if we go back to the things, step 1 is the cross, step 2 is the pull away, step 3 is the pullback to the BBC with a down close, step 4 is a bearish divergence with a red cycle. All that happens on this bar. Okay, this one right here. That's your down close, your entry points right here. Okay? Right now, for instance, you have your bullish cross, price is pulled away. The cycle is overbought, so if it pulls back down to the BBC, it'll give you some bullish divergence. As long as the cycle stays blue and you get bullish divergence, it tests the BBC, meaning it touches it, and it closes back in the direction of the cross. Then you'll be okay. Because you see you do have closes above this level. Alright? So, right here, if those pieces came together right now, you'd be looking to get long. Alright? Now, we pointed out earlier, or Dwayne pointed out earlier, important levels. Now, the thing that I wouldn't do is go long into the weekly trading zone right here. Okay, what it looks like it's trying to do is work its way up to the BBC here on a larger time frame, but I wouldn't go long into the weekly trading zone. All right, and you can see where it is right now. It's going long into it right now. So I would anticipate a bounce off of that. You see how the divergence on every down tick, you see how the divergence extends over here? That's what you would be looking for. That's on the ES. You look for the same exact thing on every chart. You're looking for the same exact thing. All right? It happens a lot more often on other charts, like pretty much every other chart. But it happens a lot more often on other charts than it does on the ES, just because the ES is a little slower. All right. That said, I'm going to wrap up my recap. Unless there's any more questions, I'm going to wrap up my recap. And if anybody has any more questions, you can email us at support@cfrn.net, or you can call me at 949-423-6464. Again, that's 949-423-6464. That's it. That's it. If you haven't taken the free trial, go to cfrn.net/apply. If you have taken the free trial and you want to become a partner and you don't know what it takes, send us a quick email at support@cfrn.net and just put partner info in the subject line. All right.